Will strategy sell Bitcoin? That's the big question the crypto community has been anxiously trying to answer lately. Why did the price of SUI shoot up by 35% over the past week? What should we expect from XRP, and which economic events should we closely monitor in the coming days to get a rough idea of where the crypto market might be heading? These are the topics in focus today, and for those of you who want to stay as informed as possible about everything happening in our industry, please download our mobile app and let us know in the comments whether you like it. The link is just below the video. Also hit the like button on today's video so we can keep bringing you regular episodes. Strategy, formerly MicroStrategy, is the company founded by Michael Saylor, which turned Bitcoin into a core element of its business structure. The firm is the largest corporate holder of the cryptocurrency in the world, with nearly 820,000 coins worth over $61 billion at current prices. Strategy began accumulating Bitcoin in the summer of 2020 and has followed the almost religious principle of buy and never sell ever since. That's exactly why any change in the company's behavior creates huge tension and speculation within the crypto community. In recent weeks, however, the leadership has started talking about a more flexible model. Instead of strictly adhering to never sell, Strategy is now considering the possibility of limited sales when this improves their key metric, Bitcoin value per share. This is a fundamental shift from their previous philosophy, but it does not mean abandoning BTC. The idea is to manage the balance sheet more intelligently, optimize capital structure, and use Bitcoin as an asset that can be strategically managed rather than simply stored. CEO Phong Le explained that sales would only occur if they are better for shareholders than alternatives such as issuing new stock. In other words, not because the company is losing faith in Bitcoin, but because it wants to use more efficient financial tools. He emphasized that market liquidity is sufficient to absorb such moves and that Strategy holds around 4% of all BTC in circulation, a significant but not dominant share. Michael Saylor, who remains the driver of the strategy, also provided clarity. He stated that for every Bitcoin sold, the company would buy 10 to 20 new ones. This statement is perhaps the strongest signal that any sales would be an exception, not a new pattern of behavior. Saylor stressed that the goal is to increase exposure, not reduce it. They will simply use more sophisticated financial mechanisms to achieve that. Interestingly, just days after the initial comments about potential sales, Strategy once again signaled an upcoming purchase. Saylor posted his message "Back to Work BTC", which traditionally precedes new acquisitions. Shortly after, it became clear that the company is indeed preparing to increase its position once again, despite the loud discussions about possible sales to finance dividends. Strategy usually announces new Bitcoin purchases every Monday, so by the time you're watching and listening to this video, they may very well have already added more coins to their treasury. Now that we have clarified the situation around Strategy, let's move on to the next big topic from the past few days, the price surge of SUI. Why did the asset jump 35% over the last week? Well, thanks to a combination of several positive factors. In recent days, institutional interest in SUI has risen sharply. Large staking operators and funds began locking significant amounts of tokens in the network, reducing circulating supply and creating natural upward pressure on the price. This staking is not just speculation, it shows confidence in the long-term sustainability of the ecosystem. Second, the SUI network announced a new feature that sparked huge interest: zero-free stablecoin transfers. This is a major innovation because it makes SUI one of the most efficient platforms for digital dollar payments. In a world where USDT and USDC are used daily for billions of dollars in transactions, such an advantage can attract both users and businesses looking for fast and cheap transfers. Third, activity within the ecosystem increased significantly. Decentralized applications on SUI saw a rise in volume, and developers began using the network's unique features more actively, such as parallel transaction processing. This created the impression that SUI is not just another Layer 1 project, but a platform with real technological value. An additional boost to the positive momentum came from one of the most respected traders in the industry, Peter Brandt. He analyzed Sui's chart and stated that the token has formed a major bottom, which in his view is a classic signal for a potential continuation of the upward trend. Brandt, by the way, is known for rarely commenting on altcoins. According to him, the price structure shows a completed correction and the beginning of a new impulse. He emphasized that Sui has broken key resistance levels and entered a zone where buyers dominate. Now we move on to XRP. Ripple's cryptocurrency briefly crossed $1.50 over the weekend, and at the time of this recording is trading around $1.45. A few days ago, analyst Ali Martinez predicted that a close above this important zone could lead to a jump to $1.80. For his part, ex-user Bert believes the asset may be on the verge of a major repricing. His main argument is that XRP has been in a prolonged phase of suppressed price action that does not reflect its true fundamental state. According to him, the market is underestimating the scale of XRP Ledger usage, the growing interest of tokenization, and the fact that institutions are beginning to experiment with real payment solutions on the network. He claims that the trigger could be a combination of several factors: new partnerships, regulatory clarity, and increased institutional usage. The idea is that once these elements align, XRP could react sharply upward, as its current price does not reflect the ecosystem's potential. This, of course, is not a guarantee of future movements, but it shows that sentiment around the asset is beginning to shift. Finally, let's look at which economic events are worth watching closely this week, because they can determine the short-term direction of the crypto market. The most important one comes on Tuesday, when the US inflation data CPI will be released. This is the event that traditionally brings the most volatility. If inflation comes in lower than expected, the market almost always reacts positively, as this strengthens hopes for earlier rate cuts. Conversely, higher inflation can cool enthusiasm and lead to quick sell-offs, especially in riskier assets like altcoins. Then on Wednesday, we get the retail sales data. These numbers show how strongly American consumers are spending and provide an important signal about the state of the economy. Strong data may indicate that the economy remains stable, but it can also maintain inflationary pressure. Weak data suggests cooling, which may prompt the Federal Reserve to soften its tone. In both cases, the crypto market reacts because these numbers directly influence expectations for future Fed policy. Throughout the week, there will also be several public statements from Federal Reserve officials, which can add additional uncertainty. These speeches are usually spread between Wednesday and Friday, so the market may react in several waves. And finally, throughout the entire week, we need to monitor the movements of US stock indexes, especially the Nasdaq. The correlation between tech stocks and Bitcoin remains high, so a strong or weak day in traditional markets almost always affects the crypto sector. That's all for today, friends. Have a great and successful start to the week, and see you tomorrow.